It's 1:30 p.m. in Lagos, 12:30 p.m. in London, and in Accra, Ghana. And we're bringing you markets, analysis, and insights on Business Incorporated live from Channels TV. And here's what's coming up on the program. Namibia loses 1.5 billion Namibian dollars every year to illegal fishing. And Tanzania plans new $5.6 billion rail to iron ore coal-rich area. And in Nigeria, price of bread jumps more than 50% in 1 year. Hello and welcome to the program. I'm Will Ibang. Let's kick off with the markets. First up, major equities in Africa. We're at intraday. Major equities were trading mostly negative. We see Nigeria down 0.02%. South Africa was also down, was up, however, trading in the opposite direction, 0.09%. Let's see how Egypt performed at intraday. Massive drop there, 2.49% for that index. A lot of profit taking or sell-offs there. Now, Kenya closed Monday session in the green. That's a good one. Now, let's look at the Middle East and see how they did at intraday's. Mixed sentiments there. Abu Dhabi up 0.27%. Dubai also up 0.35%. Elsewhere, still within the region, we see Saudi and the Qatari indexes trading down 0.06 and 0.2% each. Now to the UK, where Prime Minister Rishi Sunak has been accused by his Greek counterpart, Kyriakos Mitsotakis, of cancelling a scheduled meeting in London today, which is Tuesday, and in a diplomatic row over the Parthenon sculptures. Britain's Sunak. Let's bring in Juliana right now to talk to us about that. Juliana is in London with the details. Juliana, Prime Minister Rishi Sunak has been accused of snubbing the Greek Prime Minister. Why do you think he cancelled this meeting at the very last minute, seeing that this ongoing row over the Parthenon sculptures has been a sore subject between the two countries for centuries?
It has. Good afternoon, Will. This is a pretty embarrassing row, I've got to say, for Prime Minister Rishi Sunak, who, as you quite rightly said, at the very last minute cancelled a 45-minute lunch, which I think was supposed to be happening now, between himself, of course, and his Greek counterpart, the Greek Prime Minister, Kyriakos Mitsotakis. Now, there are two sides to this, and I'm sure there are going to be other sides from Downing Street. We're still actually waiting to hear an official announcement from them. But first, let's talk about the UK Global Investment Summit, which of course took place yesterday. Once again, Britain set the scene for, top elite business leaders to come into the country. We did have a big announcement, £29.5 billion of pledges. However, if you scratch beneath the surface, a lot of these pledges are just that, pledges. We're actually not going to be seeing any of the investment for years. But anyway, of course, we know, lots of people know, if you look at the polls, it does suggest that by this time next year, Prime Minister Rishi Sunak may be on the opposition benches, which is why lots of business leaders who came into town yesterday decided to trek from Hampton Court Palace, which is kind of on the outskirts of London, into the city where they had sit-down talks with the leader of the opposition, Sir Keir Starmer. Now, that is really embarrassing for the Prime Minister because, of course, it was his big day. There was a reception at Buckingham Palace in the evening, and I think Number 10 certainly thought that was going to be enough to woo these investors, but clearly it wasn't. They've got the right comms people in their ear, and they decided to spend lots of time with the leader of the opposition and who could be the new UK Chancellor of the Exchequer, Rachel Reeves. One of those individuals to do that was actually the Greek Prime Minister. So according to the sources I've been listening to and speaking to today, they believe that Rishi Sunak was deeply offended by the fact that the Greek PM decided to meet with the leader of the opposition before meeting the Prime Minister. So that's the backstory. But then, of course, we get to a really important talking point, which is the Elgin marbles. Now, that's not what they're actually called. I do believe they're called the Greek Panathion. I'm sorry if there are any historians who are listening and I've pronounced that wrong. But of course, this has been, as you said, a centuries-old debate between the British Museum, between the British government and Greek historians and the Greek government, who quite frankly want these very historic, very precious artifacts back. They just don't believe they belong in the British Museum. And, you know, this is a big story because, of course, this isn't just affecting the Greeks. This also affects Nigeria. When Britain were ruling the world and, you know, they said the sun didn't set on the British Empire, for hundreds of years they were going around different countries taking, you know, precious items that just didn't belong to them. And I think Britain have come to an understanding that these items don't belong to them. The problem is the British Museum, where a lot of these items are being held, does actually have legislation that says you cannot remove them. So the conversation is whether or not the British Museum are going to loan some of these items to Greece. So it's a twofold argument at the moment, and it is becoming more complicated because now the chairman of the British Museum is George Osborne, and George Osborne was the Chancellor of the Exchequer, so he obviously understands just how significant and important these artefacts are to the British economy, because of course when tourists fly into the UK, if they've got time on their hands, they go to the British Museum. So it's all coming out in the wash, but, you know, the Greeks not happy at all that their Prime Minister has been snubbed, but on the other hand, Rishi Sunak not happy that he was downgraded by the Greeks to second place, and they went to go and see who could be the Prime Minister in waiting, Sir Keir Starmer, before him.
Very, very tricky road there, and we'll just see how they resolve this. 2,500-year-old sculptures are not something to play with, Juliana, especially when it has to do with one's heritage. Now, let's look at other matters now. You know, still in the airline, we're going to airline space now. British multinational low-cost airline EasyJet has revealed a £34 million windfall after record profit performance. The company appears to be upbeat for the current financial year, despite the continuing impact on earnings from the Israel-Hamas war that has grounded 4% of its flying program. How do you think they managed that?
I think they managed it, Will, because quite frankly, Brits do love to go away. They love to jet off on holiday. And despite the fact that we are going through a significant cost of living crisis, I think for lots of people working up and down this country, that summer holiday break is exactly what they need. And they've been taking full advantage of it. If we just have a look at EasyJet's numbers, now they have reported today full year profits of £455 million. That's a record for them for full year. And in fact, it was so good, for the first time in 3 years, they have decided to reinstate dividends to shareholders. So no surprises, they are one of the leaders on the UK blue chip index today. I think, look, you know, EasyJet are doing particularly well as well because they are a budget airline, no frills. You know, you kind of get what you can when you're on an EasyJet flight. There is no such thing as telly. You do have to pay for your snacks, but it's a great business for them. In fact, they have actually done exceptionally well in their holiday offering. So if you are somebody that wanted to book a flight on an EasyJet website, it's not just a flight. You can also put a full package, so you can get the hotel, you can get a car, and that has increased by 77%. In fact, they are really dominating that market at the moment. So yes, things are good. It hasn't been easy, obviously, for the past few years for airlines because of COVID, but they are slowly getting back. And I think EasyJet's results today just reaffirm that belief.
Definitely getting back to pre-COVID levels there. 77%. That's a good number. So how are markets reacting to all this news, especially with EasyJet and the rest of it?
Not great, actually. The FTSE All-Share is in negative territory. Like I said, I wasn't on Business Morning this morning, but there's lots that's come out of the wash from the UK Global Investment Summit. It was supposed to be really glittering and a grand stage for Prime Minister Rishi Sunak, but lots of holes have been teared into that, particularly now this diplomatic row with the Greeks, which, Britain certainly doesn't need because Greece is so pro-British. It's just coming at the completely wrong time. That's reflected into the markets. The FTSE All-Shares down, as I was saying, by 0.27%. FTSE 100, that's down to at 0.36%. And the FTSE 250, well, the domestic market, that's down by 0.61%. In the currencies market, the British pound is rallying up against the US dollar by just 0.01%, up to against the euro by 0.01%, but down against the Japanese yen at intraday by 0.15%. Well,
we do hope those numbers do pick up, Juliana, before the close of the bell. We do want great numbers tomorrow. Thank you so much, Juliana, for that update. Now to the EU, where ever since Western countries have put sanctions on Russia over the country's war in Ukraine, Moscow has had difficulties selling resources for money urgently needed to keep the war efforts going and the budget stable. Lars Alter is with Deutsche Welle and he joins me from Berlin. Lars, Russia is still selling oil, but what are the latest troubles here?
Yeah, thanks for having me. Well, the main problem for Russia is that it almost seems like they weren't really considering how they too depend on Western economies in many ways. Sure, Putin knew that with his war effort in Ukraine, he would risk losing his European customers and he would likely have to find other partners to sell his oil to, or natural gas for that matter, as he did, by the way, with much of Russia's oil now going to China and to India. However, the problem is that the oil trade has for decades been dollar denominated, and with American sanctions levied against Russia's trade, Moscow has tried to avoid dealing in greenbacks. But which currency should you use now? The problems really came up when India, which has become Russia's biggest buyer of seaborne oil, insisted on paying in rupees, and the trading activity nearly fell apart. That was after informal guidance came from the Russian central bank that it would not accept the currency. The thinking behind this is the central bank says receiving revenue in a currency with little value outside India was, quote, pointless.
So are there any solutions in sight?
There's been a bit of a workaround as of now because Moscow came under tremendous pressure. That's after two major Russian oil companies threatened to divert a dozen India-bound tankers carrying up to 1 million tons of oil to other destinations if no payment option outside using rupees could be established. So as a temporary solution, the cargoes were paid for in a combination of the Chinese yuan, the Hong Kong dollar as a transition currency into the yuan, and the UAE dirham, which is pegged to the US dollar. Now that's obviously a bit complicated. Also because India is not the only customer with the currency problem. Buyers in Africa, China, and Turkey are also affected by all this, albeit as a lesser rate because India is currently buying more than 60% of Russian oil. So they'll be working on this some more, I'm sure, but it's safe to say that the dollar won't be back in terms of trade in Russia, and that's for two reasons. The Russian central bank cannot operate in dollars because of those sanctions, and while Russian exporters theoretically can use the currency, avoiding it has the advantage for them of making it harder for the United States and other Western governments to monitor their trade.
So what are investors looking at in today's markets?
Well, this week, once again, we're waiting on some more U.S. inflation data for a better look here, but we're also looking at some consumer news. That's because we are now done with Black Friday and with Cyber Monday. That, of course, was yesterday. And at first glance, the numbers say that consumers spend around $12 billion in the U.S. just over that online shopping day, and that is a new record. Now, when I say online shopping, we're not just talking about Amazon and other online retailers, but really all of the retail sector, but only their sales through their respective websites. Walmart and Target are included there and all the others. And now these big brands, despite their good sales numbers, are all cautioning on the strength of the consumer, citing higher interest rates and depleting household savings. And they're basically saying we're good for now, but nobody knows how long this lasts.
Thanks so much, Lars, for that update. Now we move to the US, where stock futures were slightly lower in early trade on Tuesday as traders analyzed the strong gains seen throughout November and the trading month nears its end. Dow Jones Industrial Averages futures slipped 0.01% as S&P 500 and Nasdaq 100 futures fell 0.09%. Now shares of Zscaler slid nearly 7% in after-hours action on Monday. The cloud security company maintained its expectations for fiscal 2024 billings of $2.52 billion to $2.56 billion. Also, fast fashion giant Shein has confidently vowed to go public and is moving forward with its long-rumored IPO and is looking to expand its global reach. Now, the retailer was last valued at $66 billion. Meanwhile, let's check out yesterday's close with our correspondent, Maria Bird.
The U.S. stock market was down on Monday. It was not able to rally after the long holiday weekend. The Dow Jones was down at 0.2%. The S&P 500 also down at 0.2%. And the heavy tech Nasdaq was down at 0.1%. Even though the stock market showed signs the books will end in the highest they've seen in several months, it was not enough to keep the day up, even though the Nasdaq showed positive signs throughout the day, but closed slightly down. Investors are also watching to see what will happen in the U.S. economy, as there are hopes that U.S. interest rates could decrease in the near future as they look toward the end of the calendar year.
Thanks, Maria. Next, updates from the commodities market. Stay with us. This is Business Incorporated. Thanks for staying with us. Now, Nigerians have seen an over 50% increase in the price of 500 grams on sliced bread in the country in 1 year. The price of a big loaf of bread has increased sharply to 1,200 naira from 800 naira a year ago. Bread constitutes 1.4% of the inflation basket in the country. Now, bread prices are reportedly a big contributor to Nigeria's soaring inflation rate, which is at an 18-year high of 27.33% in October. Fumi Adebowale, analyst, financial derivatives company, joins us. Good afternoon, Fumi. Recently, the Premium Bread Makers Association of Nigeria, PBAN, blamed the ever-increasing cost of baking ingredients and forex scarcity for the bread price hikes. Do you share this sentiment, and would you say that this is entirely correct?
Thank you for having me. So we have seen the price of bread increase by about 50% in the last year. And if you look at bread, bread is an essential commodity in Nigeria. Virtually all households eat bread in Nigeria, both low and high income class. And the increase in the price of bread can be actually attributed to the spike in the cost of raw materials. And if you look at the essential materials that are used to produce bread, flour is one of them. Flour constitutes about 65 to 70% of all the inputs that is being used to produce bread. And we have seen the price of flour coincidentally increase by 50% in the last year to 48,000 naira. And that is because flour is made from wheat, and the price of wheat is being imported in Nigeria. Wheat is the second largest most imported commodity in Nigeria. So, and while we have seen the global price of wheat decline because there is an ease in supply disruption, we are seeing the value of the naira increase, the value of naira depreciate, and that's limiting the price gain from the reduction in global prices. So the exchange rate is affecting wheat in two ways. Number one, the naira cost of the price of global wheat is increasing, meaning that if a bushel of wheat costs about, let's say, $300, and the exchange rate is like 1,000, meaning that a Nigerian importer will be paying about 300,000 for a bushel of wheat. But with the depreciation in the value of the naira, we are seeing an increase from about 300,000 to 360,000, meaning that you need about 60,000 naira extra to buy the same quantity of wheat. So that's actually affecting the price of flour in Nigeria, and that's filtering into the price of bread, which is the end product. But apart from flour, we're also seeing the price of other imported commodities that are used for bread production increase. For instance, the price of sugar have increased, the price of yeast has increased, and all these factors are actually driving the increase in the price of bread. But more importantly, we are also seeing that the price of diesel, which is mostly used to power ovens, have spiked in the last year. So all these factors are actually driving the price of bread in Nigeria. But more importantly, you will see that bread only constitutes about 1.4% of the inflation basket. So there is a basket of commodities that the NBS track every month, and there are weights that have been attached to these commodities. So bread only accounts for 1%. The impact of increase in the price of any of the commodity, the impact on inflation on the overall basket will be dependent on the weight that is being attached to it. So since bread accounts for only 1.4%, we don't expect it to have a significant impact on inflation. And that is why we are saying that inflation, though it is still high, but the pace of increase is not as high as the increase in the price of bread.
For me, I hear you. Very interesting points you raised there. But aside from the increasing production costs, that's the input cost, from rising cost of baking ingredients, some bakers have complained about multiple taxation, which contributes to operating costs of bakeries in the country. What is the policy? I want you to share with us now. What is the policy direction? What policy direction is there to support bakers at the moment?
Yeah, so one of the complaints that manufacturers are actually given is the multiple taxation system in Nigeria. But the federal government is trying as much as possible to reduce the number of taxes that are being paid, to be able to reduce the impact on the cost of operation for manufacturers generally, not just for bread producers. There are other players in the industry that are also being affected. So I believe that when the number of taxes that are being paid is being reduced, is going to reduce the cost of operation, and that's going to increase the margin for bread producers as well as other players in the manufacturing industry, especially.
Okay, so the IEU is also expecting the price of wheat to fall to $301 per ton in 2024 from the $344 per ton we was currently seeing this year. How will this affect the production and price of bread in the medium to long term?
Yes, so like I mentioned earlier, wheat is flour is a major ingredient for the production of bread, and flour is being produced from wheat. So whatever happens to the price of wheat, as well as the value of the naira, will affect the price of flour, which will also filter through to the price of bread. So with the projected decline in the price of bread, and interestingly, it is expected that the exchange rate will also stabilize in the near term, and that's because, if you could remember, at the last bankers dinner, the CBN governor reiterated its commitment to maintaining price and exchange rate stability, meaning that interest rates are likely to increase. And when that happens, it's going to motivate people to save. And in a way, it's going to mop up liquidity in the system, and that will also reduce the amount of naira that will be available to purchase dollar. And we expect that to reduce the pressure on the forex. So if that happens, and fortunately, if there's an increase in dollar inflow into the country, we expect the naira to stabilize and eventually depreciate. So if that happens and the price of wheat also fall, it is win-win for bread manufacturers, because the cost of raw materials will increase, and when that happens, we expect it to filter through to lower price of bread in the medium term.
I do look forward to that good news, especially, and I know a lot of Nigerians are also looking forward to that. Thank you so much, Fumi Adebowale, analyst with Financial Derivatives Company, for sharing your insights.
Thank you.
Now we move on to other stories, where Namibia says it's losing about 1.5 billion Namibian dollars to illegal fishing annually. Namibia's Fisheries Minister Derek Claassen, who made this known, has expressed deep concern over the magnitude of illegal, unreported and unregulated fishing on the country's coastal line. The minister said the plundering of Namibia's resources continue unabated, with neighboring countries also implicated in these illicit activities, both inland and at sea. To counter this, the ministry has decided to allocate up to 50% of its control, monitoring and surveillance sea operations to the northern border with the Republic of Angola. Mr. Claassen is optimistic that these efforts will lead to a tangible reduction in illegal fishing activities. Now, Tanzania says it is seeking $5.6 billion for a new railway in the south linking the Indian Ocean to Lake Nyasa and traversing regions rich in iron ore, coal, and graphite. The East African country is looking for public-private partnerships for the 1,000-kilometer line, according to the Tanzania Railway Corporation. The agency says it's made a pitch to investors and financiers at the Africa Investment Forum in Marrakesh, Morocco, earlier this month and secured at least $2.2 billion of interest in the project. And that's it on Business Incorporated this afternoon. I'll see you tomorrow for another edition. Thanks for watching.